Hi again. So this is the last session, but all the big money is here, so stay tuned. And we'll talk about the last year. We're already heading to the end of 2024 and looking forward to 2025. And if I have to say what I was surprised me at least over the last year is that there was some kind of expectation that it will be a rebound year. We'll see lots of IPOs and M&A, and it's till now it's more or less like resembles 2023, which is for Israel good news because we didn't miss much maybe, but we are looking now to the elections in the US and the interest rates are starting to go down, and maybe it's starting to be really more better potential for tech investment. And Davor, I would like to start with you. Eight Roads, huge fund, large investments all over vertical stages. You have really mature companies which are ready for IPO, but we are not seeing any window opening. I don't know, maybe London is better, Nasdaq is still pretty much closed. How do you explain that, what we saw till now, and what are your expectations to the next year?
Thank you. Hi, everybody. Great to be here. Look, I continue to be optimistic. I think more broadly on the market, I think 23 would probably prove to be sort of a bottom of the cycle. But cycles don't rebound sometimes very quickly, and certainly interest rates are not helping. When we look at, in particular, our Israeli portfolio, like you said, we have several companies that are scaled beyond what I think we were thinking 10 years ago. The companies are destined to do, but we believed that there will be huge global champions. We have at least, a quarter of our portfolio that are 100 million plus of ARR, oftentimes very profitable, still growing and performing to plan. I think the capital markets are conservative still, and we have seen some traction earlier in the year, but then, like you said, things have slowed down a little bit. I think 2025 will be a good opportunity for companies that are scaled. So 400 or 500 million of ARR, still growing decently well, profitable with a rule of 40. But I also think that we will see increased M&A momentum. We recently saw a big deal with Salesforce and Own, about 1.9 billion. Of course, we need to see regulatory approval. We have had at least 3 exits in the last 6 months in Israel in the sort of 100 to 800 million. So I'm optimistic, but we'll have to wait past the election probably and into 2025.
Okay, thanks, Davor. So you started the fund with your father, right, LocalGlobe, and it was at the beginning early stages, and now you're expanding to more later stages. What is your investment thesis today? What are you seeing at the markets?
Firstly, I just want to say it's great that this conference is happening in London. There are 2 cities in EMEA that have more than 100 unicorns. One is London and the other is Tel Aviv. So it's great to see the London-Tel Aviv connection happening. Our investment thesis has always been to try pick companies at the very earliest stages that can turn into really national, regional, or global champions. So what that means is starting at seed stage, but then also being able to support those companies all the way through their life cycle. So, while we've picked 13 unicorns at seed stage in EMEA, like Davor, there are now 26 companies in our portfolio that are doing over 100 million in revenue. 11 of whom are in fintech. London's pretty good at fintech. Actually, a number of our Israeli companies like Melio, Rapid, and others are also in the fintech space. So I think, we are in the business, all of us, in sort of investing early and then supporting these companies over the long term. So if I'm honest, I don't really think about macro. Because, you know, the companies that we want to back play out over decades, not over months and quarters. So I know you can have all sorts of macro factors that impact the markets, but we're looking to back founders who build for the long term, think for the long term, and can create value over the long term. So I think if you look at the asset class, you know, there's now a generally well understood view that if you're prepared to invest early and keep following your winners over time, you can do very well. 7 out of the world's top 10 companies were venture-backed and didn't exist 50 years ago. So we're interested in, you know, what are the ones in the next 50 years? And you've got to go early. And if you want to be in EMEA, you've got to go in London and you've got to go in Tel Aviv.
Okay, sounds good. Easy, going to you. Remagine is active mostly at the pre-seed stages, which is really the beginning of the company. And over the last year, we hear that in Israel there are less new companies, new startups, from the obvious reasons. Do you witness that really in the field?
Yeah, first, great to be here. Thanks for having me. Yeah, I think that in general, we didn't have the luxury of ignoring the macro factors in Israel over the past year. You know, there's been war. Before that, there was a judicial reform. And it definitely had an impact in the number of new companies. But I would say that the entrepreneurs that are coming to the table now and starting their companies now are extremely impressive because they know that they're entering a tough market and they tend to be coming with this attitude of grit and understanding that it's not going to be simple. I think that for an investor, there's a lot of advantages in deploying capital right now, especially at the early stage. You know, I saw an interesting stat that 30% of the unicorns in the US not only are not profitable, but also have declining sales. And I think that's a very tough position to be in if you're looking to raise growth capital. But we are first check investors at Remagine Ventures. And over the past, you know, over the summer, over the past month and a half, we did 5 pre-seed investments, and you see in Israel, and you see the stats coming out of Startup Nation Central with 7.8 billion raised in the first 9 months of 2024, and I think that's extremely underestimated because I think startups choose when to share this news, and they don't want to release good news in a bad cycle when we're getting existential threats from multiple countries. So I'm very optimistic about the future, and I have a huge amount of respect for the founders that are stepping up now and creating companies, dealing with all this complexity in their homes, etc.
Are there first timers or more second timers?
Out of the 5 that we recently did, 3 are second timers, like either sold companies before or had senior roles at large companies, and they already know who they want to work with, and they choose to also partner with investors that already have the network and a belief in their market. So you know, we find the fit very, very quickly.
Okay, it's also some point of optimism. So I'm now turning to you, Gidi. New era, new fund. You are brave enough to trying and raising a new fund over the last month. You already got commitments for half of the $150 million new fund. How was this experience during this period? Do you feel like the institutional investors, family offices, are already back to previous appetite for technology?
Well, first of all, I think we're going to look back in 5 or 10 years at this period, and we will see it for what it is, which is one of the most attractive periods in over a decade to invest in Israeli technology businesses. I am absolutely convinced of that. We have raised over half of this fund during a war. It does help to have had a couple of prior funds that have done well. We've got a 7X fund in our first fund, and a top quartile fund in our second fund, and over 30 companies in the portfolio. So we've done well, but the quality of entrepreneurs that we're seeing, notwithstanding the numbers, is extremely high. Most of our investments are in companies that are in early growth phase, and these people have built prior companies in the main. They've grown other businesses. They have experience. What they're looking for is what we're trying to provide, which is a high-touch model, which actually essentially takes these companies from Israeli companies that are selling outside of Israel and helps them become global companies. To do that, you need a global infrastructure. We have offices in Boston, in London, and our main office in Tel Aviv. And you need an experienced base of professionals with experience building companies, relationships all over the world, and the financial acumen to make decisions on how to do that. We think we have that, but the most important thing we have is the raw material, which is entrepreneurs. Some of them, there are companies in this room who are run by exceptional people. And it's a pleasure to be able to work with these companies and actually bring them to the world stage.
Okay, but what are the feedbacks that you got from the LPs, your new LPs, your potential LPs? What do they say about investing in Israeli tech during the war?
So it is, I think Neil Tzuk said this earlier, it is more challenging today for Israeli companies to raise money. There's no question about that. Many of the international players, American funds, European funds, are more not just disciplined, but in some cases wary of investing in a war zone. All it takes is somebody at the back of the room in an investment committee to say, oh, well, we have these two investments. One is in Israel, that's great. And the other one's in Singapore. Why don't we invest in the Singapore company first? There's no war going on. So you have to break through that. And to do that, you have to have a track record, obviously, but you also have to be able to explain the Israeli ecosystem for what it is, which is pound for pound, in my opinion, the highest quality ecosystem from the standpoint of one word, resilience. Oh. What this war has shown is that Israeli founders and companies have an ability to adapt, to bounce back, to continue to create value when 15%, in some cases 20% of the workforce is doing reserve duty, and to not skip a beat. None of the companies that we work with in our portfolio missed critical deliveries to customers over the past 11 months. It's true. And by the way, relating to what Vidra just said a few minutes ago, in the main, these companies are completely committed to making sure that Israel remains a viable and vibrant democracy. If you look at the last 18 months, which started with the so-called judicial reform, and now there's a war, one of the main group of leaders that actually drew a line in the sand and said, this is a democracy, this remains a democracy, is the high-tech community in Israel, and that continues to be the case. So all of these things make us optimistic that we're going to be able to build as successful companies out of these new ones that we're investing in. We're investing out of our third fund.
Thank you, Gideon. You mentioned the ecosystem, and there is no one who sees and knows the Israeli ecosystem better than Maya, CEO of the Bank Leumi's tech branch, activity, arm. Everything about tech goes to you. And how do you see the Israeli ecosystem today? What changes do you identify? What new forms of funding? What do you see?
Thank you. First, I want to echo, I think the first thing we're seeing is we're seeing more and more investors openly recognizing the value of innovation in Israel in these specific times, recognizing and openly speaking about the impact of the challenges that the local ecosystem is experiencing and the potential impact that that will have on the quality of the technology coming out of our region. So I think the technology in Israel will only become stronger and stronger, and I'm happy to see the investors beside me recognizing that. I think what couples that message is something that was spoken about, but is very important to mention, that when you speak about the local ecosystem, it's where the technology happens, but where the market is global. So with the resilience of the Israeli ecosystem, the strength of the innovators, the entrepreneurs, the quality of technology coming out of there, and with the markets being global, I think that's the secret that continues to drive the Israeli ecosystem. So you mentioned 2023 was stable, but I think we've actually seen some good news. It's modest growth, but it's definitely optimistic indicators. But also we look at the global market and some trends in funding and how those can slowly trickle down into Israel and have a positive impact. Some of the things we see are increased participation of CVCs, corporate venture capitals. Part of the reason that they play an important role in this macroeconomic condition is the fact that they're also driven by strategic agenda, and with the quality of the technology, again, over years, impacting industries, I think that they're playing an increased role. Globally, they've doubled the share of venture capital participation over the past 5 years, and I think we're starting to see first signs of that in Israel. We're also starting to see a renewed view on debt. So venture debt is something that more and more boards are discussing. I think what's different nowadays, it's not just like a plain vanilla, let's take venture debt. It's a more thoughtful approach to debt. More debt considered in situations that are assigned to revenue, more trenches, a little more thoughtful and more approach of growth driven by debt, and how the debt can actually help take the next step in growth and enable the investors to then follow one with more equity. And I think the last thing we're seeing is we're starting to see investors drive more creativity with valuations to allow...
Creativity with valuation, it's a good thing or a bad thing?
Creative approaches to deal with high valuations that were the legacy from 2021 and 2022. I think that's going to unlock additional round of investments coming into the market.
Thank you, Maya. Speaking about valuations and what we saw over the past years, do you think that terms like unicorns are still relevant? They say something, because we saw valuations fluctuating, and not every unicorn is really a unicorn, right? How do you see that? Do you still measure in these terms?
I don't want to say that we never really cared about the valuation. I mean, for venture capitalists and founders alike, probably the most important valuation is on the day of exit, and everything along the way is sort of a kind of a yardstick, but not really the answer. So I think we've always focused on kind of healthy growth, and certainly there's been a bit of a school of hard knocks, I would say, for people who have raised valuations that were not kind of appropriate for the stage of development of those companies. And I think we start to see a lot of realizations that, look, I just need to go back to building companies. And again, in our portfolio, I would say a number of companies focus really on, how long is my runway, and can I grow back into those valuations? And sometimes I think probably some companies will also decide that maybe upon exit, maybe it's not even going to be at the last round's price, but it's still probably a good deal, to exit at this point. So I don't know. We are. I mean, I don't want to say like kind of we told you so back in the day, but I think we focus on just building great businesses, and then ultimately.
Thanks. So I think I saw you in one of the interviews using a term future corns. It's you?
Look, I think...
What's the difference between unicorn and future corn?
Well, I mean, if a unicorn is $1 billion, a future corn is 300 million to $1 billion. But I think the more important point here is this point that this is a long-term asset class. And that, while value is a sort of subjective, and by the way, value is subjective in the public markets, not just in the private markets. Fundamentals are not subjective. So a fundamental could be revenue growth, margins, dare I say...
The real stuff.
Free cash flow. But I think what's really interesting to me is that, while Silicon Valley has been building an innovation economy for 53 years, if you take 1971 and the Intel microprocessor as the beginning, we, and by we, I mean, EMEA, or, let's just look at the 200 unicorn cities. London and Tel Aviv have really been building these ecosystems for about 20 years. I mean, I don't know the numbers in Israel. Maybe Maya knows them, or Alan and Abe at Vintage know them. But in the UK, there are 785 venture-backed companies doing over 25 million in revenue. That's a big number. And it's a reason why when SVB struggled, one of the biggest commercial banks in the world, HSBC, said, this is no longer an investment banking opportunity, it's a commercial banking opportunity. It's the same reason JP Morgan is in this industry, because the innovation economy is not a sideshow anymore. It's the mainstay of economies. So I think, that also means that the asset class has become more mature. Ways to finance companies, it's not just equity. And by the way, it's not just primary equity. Stepstone just raised $3.4 billion to do secondaries. There's credit, there's venture debt, there's private to public pathways. It's not just about the binary go public or die or do M&A anymore. We are in a way more mature industry than we were. And that's what I mean by, if I talk about macro, those are the sort of the macro fundamentals of the industry, as opposed to, the terrible issues of like war, inflation, fuel prices.
So this maturity, it makes, till now we saw already in 20 years 2 tech bubbles. Do you think that the maturity of the markets of the tech industry will make it less prone to bubbles?
I don't think the bubbles matter.
Why many investors will argue with you.
Sure, fine. They can do what they like,
So I'm listening and I'm agreeing with 90% of what you're saying. I do think the bubbles matter because they exist, and they exist in different sectors in the industry. To say there's no bubble going on in the generative AI, portion of this industry,
my next point, yeah.
is, I think, that's not the case. I mean. And in some sectors in cyber, there continues to be valuations that are quite high. But in Israel overall, I would say, look, if you think the price of entry matters in venture capital and investing, which it does, I think, in Israel, it is a good time because we don't get a lot of calls from founders saying, here, sign this term sheet, and then 72 hours because there are 3 other funds behind you waiting to sign it. We don't get a lot of those calls these days. They're more flexible.
But you still get some?
Very few. Yeah. Seriously, there's more flexibility in valuation on terms. It's a return to reason. It's a pendulum. It swings to an extreme, it comes back. It's a time when you have to have, though, conviction. Remember Warren Buffett's famous words, when others are greedy, be fearful. When others are fearful, be greedy. And others are fearful right now, so it's a good time to think about Israel.
Okay, easy. Greedy and fearful, and I'm going to AI. We talk a lot. There's, I think, no conversation goes by without mentioning AI, and many venture capitals fear that because it changes and disrupts many business models, and your fund as the first check. How can you be sure that in the long run, the AI doesn't make the company obsolete?
Yeah, so first I would say that we've been pretty fortunate to start investing in generative AI very early on in 2019. That's a result of having a bunch of strategic LPs from the world of media and entertainment. So we always cared about content creation, distribution, and monetization. We just called it different names: synthetic media, creative automation, etc. Today, those companies represent about half of our investments. And I would say, while there is a bubble of sorts, at least when it comes to pricing in AI, the opportunities are immense. According to McKinsey reports, AI has the potential to unlock something like 44 trillion in value in the coming years across industries. And we do look for opportunities where, putting McKinsey and their projections aside, where the startups can, focus on a niche where they have less of a risk of getting disrupted by the, let's call it the foundational models or the large tech companies, but enough of an insight into that niche where they can build a large business, even if at first it looks relatively small. And we're seeing this again and again in gaming, analytics, in content creation, in the creator economy, in even other plays like where AI is replacing a very manual, inefficient human process with technology, or makes it better, faster, cheaper, etc. So I think that both things are true. Like, once there is a little bit of a bubble when it comes to pricing, we are extremely price disciplined, and we tend to invest first checks in valuations below 10 million, which compared to the US is very attractive. But at the same time, you have to, the number one concern when you're writing these checks is this company going to be commoditized next year when OpenAI does their developer day? Yeah. So, picking and choosing is a bit of a minefield, and you have to develop a view as to what can become a large business, and you have to make that decision on day one. So opportunity and risk.
Thank you. Maya, many say that Israel lags a bit on the AI. What do you see from your experience? Is it true?
I think that's a difficult question to answer. I don't think eventually Israel catch-ups very quickly. I think maybe Israel was late to AI, but definitely catching up. But if I can, I wanted to add to the word that you mentioned before, resilience. I wanted to add the word adaptability. Thank you. I think a lot of what we discussed today really leans on Israel being adaptable. We have the resilience to create the best technologies, but Israeli ecosystem is adapting to the venture capital world today and building technologies and companies to last. I think part of what we're doing, going to your point, Saul, is that we're building companies to last, bringing stronger, larger companies that will become not unicorns because of their valuation, because they have revenues, they have the scale, and they're impacting on a global scale. So.
Okay, great. So we have 1 minute to go. Let's start with you, Davor. What is your advice for an Israeli founder, first-timer, who tries to raise money in the UK?
I just, come here. I really appreciate, entrepreneurs making their way over. I know it's not sometimes easy to make it. I think everybody, as we heard it earlier, is open for business, and look for early conviction signs from VCs. There are plenty of VCs these days. I advise my entrepreneurs, look for that early excitement, understanding, follow-up call, and weed out the folks who are just sort of kicking the tires. But the dry powder is huge. So, come on over and, get some deals done.
Okay. Well, let's hope so. Saul, what is your advice for an Israeli founder?
First of all, I'd say there are 3,800 active VCs in EMEA. So that's a lot of VCs you could be raising money from. The Israeli ecosystem has incredible VCs at every stage, in every sector. So if this is the first place you're raising money, I don't know if that's that smart. Many of us very, very happily work with Israeli VCs. We work with Chetz, we work with Tech Aviv, we work with Aleph, we work with Bessemer, we work with, you name it. But there's a great industry of VCs in Israel, and I think it's really important at a very early stage to be working with people who you can go for a walk with, who you can grab a coffee with. This is a high-touch business, otherwise it's the wrong investor. So by all means, we love to co-invest, but we love to work with local VCs because they support founders locally, and then we can help them, as you say, become a global company or go into other markets. So my advice is, if it's your first check, you're in the wrong place.
Stay at home. So, Izzy, you would like to ask?
So just a word on, first of all, AI and Israel. Like, there's an interesting report by Stanford, it's the 2024 AI Index, and there's a great graph that shows that Israel has the highest concentration of AI talent per capita, per geographic area. So it's a small country, but there's a lot of AI talent there, and that's also maybe the reason why Ilya Sutskever decided to raise $1 billion seed for his company, decided to open one office in Palo Alto, one in Tel Aviv. I think it's very telling. With regards to advice for entrepreneurs, my advice, I agree with Saul that find people, and with Davor, find people that believe in you and find that spark. But also, I think people need to set their expectations right. The market has learned a lot of lessons over the past couple of years, and perhaps it's thinking about what's the minimum viable version of the product or the round that you need to raise money for. If people before could raise $5 million based on PowerPoint, because they previously did something impressive, perhaps they need to think about what's the scaled down version of that, and you can always get oversubscribed and get other people to join the journey. But get that initial capital to start, and that's why I think it's a great place to be in pre-seed.
Okay, great. Thank you all so much, and thank you very much for coming to the conference. And let's stay optimistic, and let's hope that the hostages will return soon. Thank you. Thank you very much.